Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically we had started the topic of foreign investments, right? And in the foreign investments, basically you could say that these are the topics we have scheduled for the discussion, like the foreign direct investments, foreign institutional investments, foreign portfolio investments. Okay. So these are the topics we have scheduled for the discussion under this particular series. We had started the foreign direct investments, and what we are left with the foreign institutional investments and the foreign portfolio investments. Okay, so basically we will continue in this lecture from where we had you can say left in the previous lecture. I hope that you have revised the previous one in the well enough manner before you have come for this lecture, as so many times I have reminded you. That's for your own benefit. So basically we had started the discussion over the significant increase in the FDI flows, or you can say trends in India regarding the FDI. Okay, I had told you about three schemes like the Digital India first. Okay, second one was Make in India. Okay, and third one was Startup India. Okay, I had told you about these three schemes, and these schemes basically launch in the time period of 2016. Got it? So I hope that you have revised these schemes. Okay, and even you have checked them out. Like in the previous lecture, I had told you that you must check them out. Okay, so let's go ahead. So in the trends in India, significant increase in the FDI inflows. The first reason is the large consumer base. Like India, if we talk about it, India is home to a massive consumer market with a population of over 1.3 billion people. This vast market presents lucrative opportunities for the foreign investors looking to expand their business and tap into new consumer segments. Okay, like basically, if we talk about any particular business, okay, any particular business, doesn't matter whether you belongs to, like you are the manufacturing business or you are the services business. Doesn't matter who you are, but you are the producer, right? You are the producer, you are producing the things. In manufacturing, basically you are producing the goods. In services, you are producing the services. Okay, so you are the producer. But is this the complete circuit or the complete channel? No, that is not. Why? Because the complete shift requires the person or someone who will buy your goods and services. Okay, that is the main thing, right? So if we talk about the, you can say the concept. So we have come to know about it that every business, doesn't matter whether it's belong to the manufacturing or the servicing, they require the people to whom they can sell out their products. Okay, it means the buyers. All right, and the buyers are the part of the population, right? Because who will be the buyer? Me and you. And who we are? We are the humans, and humans forms the population. All right. So you can say technically, the more population, the more population will generate the more buyer. Got it? So that's why this thing written over here. Like India is having nearly about 1.3 billion people, or you can say this much of massive population. It means that India is having huge market or buyers. Okay, and that's why we present the lucrative opportunities for the foreign investors who want to expand their businesses. Okay, because if they open their outlets in India, so they will have the access to this massive population. It means that there are chances that their consumer base will be grow tremendously. All right. Thereafter, if we talk about the favorable demographic profile, India has a young and a growing population with a large proportion of the workforce being below the age of 35. This demographic dividend not only provides a skill and the productive workforce, but also indicate a high potential for future economic growth and the consumption. Okay, like if we talk about the, you can see the demographic. To understand this, basically we have to repeat the three basic questions which we had discussed early, or you can say in the previous lectures. And what are these three questions? What to produce, whom to produce, how to produce. Okay, every business has to come across these three questions. Okay, so basically these three questions are generally derived from the through the demography. Why? Because if we talk about India, like India having 1.3 billion population, but young and growing population, or you can say India is the youngest country of the world through the population point of view. Okay, so if we talk about the young generation like me and you, so we generally having the interest in the sports, in the technology areas, okay, in the, you can say, the high tech softwares and all, right? So that's why if any business come to India and they will try to find out the answer, so what to produce, they will find that they have to produce the technologies, they have to produce the latest gadgets, sports items, and this kind of things. Whom to produce? For young population. Why? Because India's demographic having a huge population of youngsters. Okay, so if you are producing the things for old age people in India, then might be you will not as much as successful as you would be when you will start manufacturing of the, you can say, goods and items produced for the young age people. Why? Because then you will have a vast access. Thereafter, how to produce? Like if we talk about how to produce, and how to produce generally talk about the technology. Okay, like the capital intensive technology. Okay, like labor intensive technology. Okay, CIT or LIT, these kind of technologies, right? So basically, if we talk about India, then India is having workforce below the age of 35. It means that India is having lucrative workforce options, because we have the humongous people who are below the 35 and they are eligible to work on the different profiles. Okay, so it provides the skill and the productive workforce. Okay, but also it indicates a high potential for economic growth and the consumption. Why? Because not only the third question but our two questions are also, you can say, satisfied through the demographic of India, right? So that's how the demographic profile helps India in increase of the FDI. Why? Because the foreigners, or you can say the foreign businesses who were seeking to expand their business, they had seen India as a, you can say, very attractive options to come and invest their money, right? Skilled workforce. India is known for its pool of skilled and the education educated professionals, particularly in sectors like the IT, engineering, and the healthcare. This skilled workforce is attractive to the foreign investors seeking to establish operations for outsourced services in India. Like basically, we talk about this one. Okay. Like if we go to the previous example, which we had taken in the previous, you can say previous to previous lectures. This is country A. This is India. So if any company of country A, XYZ, wants to come to India, all right. So there are two methods which we had discussed, right? The first method is establishing totally a new venture. Second method is acquiring an already established venture. Okay, there are two methods. So if we go by this, if we go by this, then what will happen? Like if the XYZ is acquiring a already established venture, it means that the company or the venture the XYZ has acquired already having the you can say needed resources so that they could operate on the country. But here we are going to talk about the establishing totally new venture. Like if the XYZ is having the mood or you can say having the necessity that they have to establish a new venture in India. Okay, so what are their concerns? Like you can say formalities. That will be the first concern. And the most important concern, you can say, concern is cost of operations. That will be the most important concern. Cost of operations. Like how will they have to pay for the land? Okay, how they will have to pay for the plant and machineries? How they will have to pay for the raw material purchase? How will they have to form for the labors and all the things? So cost of operations is the, you can say, main concern of the businesses. And out of the cost, the main cost which they considered usually is the human cost. Okay, like you could go anywhere. Suppose whether it's a capital intensive technology, whether it's a labor intensive technology, okay. Also, you could call them CIT and the LIT. CIT or the LIT, whatever you can call them. Okay. So any of them, it's just a, you can say, procedure which could be only run by the humans. Like you required humans in both of them. Just scale differs. Like in the labor intensive technologies, the use of human is higher in comparison with the capital intensive technology. But labors are necessary and you can say the humans are necessary in both of the cases. Okay. So basically it means that the companies are required to operate with the humans. Now the question is, what is the cost of these humans? Like how much they have to pay. And this is what we often called as a labor cost, or you can call it as a skilled labor cost. Okay, labor cost or the skilled labor cost. Got it? So basically, if we talk about India, then India is not having only just a young population, but we also having the cheap educated labor. Okay, don't take this cheap word otherwise. It is highly advisable. That why you are calling me cheap and all. No, that's not like that. Cheap means that labor cost in India is low in comparison. It means that whatever the labor cost is, you can say outside the countries, in India, labor cost is usually low. So that makes a, you can say, wonderful opportunity for the XYZ that if they are coming in India and they establishing the totally new venture, so their cost of operations will be reduced in case of the human cost. Why? Because India provides them a cheap educated labor, okay, which they could use in the LIT and the CIT. Okay, so this skilled workforce is attractive to foreign investors seeking to establish operations or outsource services in India. Okay, because they have to pay low in comparison with the other areas. Thereafter, the ongoing economic reforms. The Indian government has been implementing various economic reforms to liberalize the economy, ease regulations, and improve the business environments. Like we can say that when we launched the Make in India initiative, okay, and Startup India initiatives, okay, so you could say that our main focus was somehow, you can say, mostly depend upon the FDI. Okay, like how could we facilitate the foreign investors to come in India and invest in India? Okay, like we could liberalize the economic reforms. Okay, we could ease the regulations and improve the business environment or make the business environment as more business friendly so that the persons who are seeking investments in India, they will be beneficial. These reforms, such as the introduction of the goods and services and Make in India initiative, have helped boost investor confidence and attract more FDI into the country. Like if we talk about the GST, then we know that it was launched in 2017. Okay, to eliminate the many indirect taxes and provide a one way solution for tax submissions and filing returns. Okay, so you could say that GST was launched in 2017 to eliminate the many direct taxes and provide a one-way solution for tax submission and filing returns. All right, and this initiative also attracts the FDI in India. Thereafter, what we have the sectoral distribution of FDI. Like FDI inflows into India are diversified across various sectors, including the services, manufacturing, construction, and the infrastructure. Okay, like when we talk about the economy as a whole, when we talk about the economy as a whole, then the economy sectors are divided into the three phases: primary, secondary, tertiary. Primary, agriculture. Secondary, manufacturing. tertiary services. Okay, but when we you can say go down in the you can say the division, then we could see that the sectors which are vital for the economic growth is the services, manufacturing, construction, and the infrastructure. Okay, so the FDI inflow is diversified in these sectors. Like, not only we got the FDI in the services, we also got them in the manufacturing, construction, and the infrastructure businesses. Okay, while sectors like the services, especially the IT or the information technology and business process outsourcing, have traditionally attracted significant FDI, there has been a recent upstick in investments in the manufacturing and the infrastructure sectors as well. Okay, like you could say that after the 1991 or new economic policy, what's happened in India, that the FDI or the foreign investments directly came to the IT industry, information technology. Okay, and if we talk about today's term, then nearly about 228 billion US dollar is the total market worth of the IT. Okay, maybe higher than it and lower than it. Okay, because the things are changes dynamically. Okay, but nowadays what is happening, that recent investments through FDI have been reported in the manufacturing and the infrastructure sectors as well. It means that the prime focus of the FDI, which was you can say mainly for the information technology, is now shifting towards the manufacturing and the infrastructure projects as well. Okay, source countries for FDI. So you could say India's FDI inflows come from a wide range of countries with the major investors including the United States, Singapore, Mauritius, the Netherlands, and the Japan. These countries invest in diverse sectors, reflecting the global interest in India as an attractive investment destination. Okay, then the major FDI investors in India are, starting with the Singapore, thereafter the Mauritius, then United States of America. Okay, then Netherlands, and then Japan. Okay, so these are the top 5 investors in FDI. Okay, remember that China, which used to be the one of the largest trade partners of India, was not in the list of the FDI. Okay, but it was not remain as it is. Okay, why? Because after 2020, the government has put several restrictions on the investments coming from China. That's why the impact of China in the FTA has been gradually decreasing. Okay, but China used to be one of the largest contributor to FTA once in a time. Okay, and if we talk about the trading partners, or you can say foreign trading partners of India, then who they are? Then these are basically USA first, then comes China, then comes Russia, then comes UAE, United Arab Emirates. All right. So remember this thing. So students, basically in this lecture we had completed till now. In the next lecture we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture. And what do we say? We say thank you.